Recording now. Hello, everybody. Get a few minutes of class to turn in chapter 20's team problem and make sure if you're online to please submit it online or email it to me. And so now we're going to jump into example 4. Now, I'll be honest, these are a real struggle. I wanted to go through a few examples with you because I like to torture myself. But you won't see a question that has kind of two of these years following up on each other and then trying to figure it out. Because it's a struggle for me even to be able to go, okay, if my ending inventory is understated, well, then my cost of goods sold is understated, and then my net income is overstated. But then what happens in the next year? So it's difficult. Now, I will show you how they solve this problem. And what they do is they flip the inventory. $2023, so 37,500 overstated. And then the overstated inventory in 2024. If our inventory is overstated, it overstates net income because we don't get cost of goods sold as an expense as a result of it. This is from the last handout, number 14, in case somebody needs one. And then we have, in this case, an insurance premium. 90,000 was prepaid in 2023, covering 2023, 2024, and 2025. So what they did was they took 90,000 in expense in 2023 when they should have been taking 30,000 in each year. So net income, so we understated insurance expense. And so that overstates net income by 30,000. And then they forgot to report gain on sale. And so this would be 47,500 understated. So sum total is 75,000 overstated. Got some hairs cut. I'm not commenting on anybody's hair. I know that can be personal. I feel bad if you feel like you got butchered.
Like that bird that
Go back in and take your tip back, right? All right, so now I just want you to kind of put your head on this and think. So I just kind of said, I can't do it mentally, what happened. And so I have to put these 2 years in a chart and make an example. And so what I did was I kind of filled all this out, and I can't remember the numbers I used, but let's just see. how I went about all this and how I came up with that number. Okay. So it said that our ending inventory was understated in 2023. And so our cost of goods sold should have been 157, let's say, for example. I just had to pull some of these numbers. And if we assume sales and cost of goods sold, your net income would be overstated by that 37,500. Now, the beginning inventory is not corrected for 2024, so it pulls from there. And then how much we used, I'm just going to make it a different number, 250,000. And don't worry about trying to keep up with this. And our ending inventory, let's see. Did I do 210 twice? 200. Okay. So when I did it, I was kind of struggling. Okay, how am I going to get my net income to correct? And so here, the way that I was able to just kind of look at it and say, okay, here's what we've got. Here's the difference. And so that's how I was able to come up with the 92,500. And so that, and then you subtract the 30,000. And then the 47,500. And so that's the 75,000 overstatement. So the only way that I could get it to make sense to me is to try putting it into financial statements. And I know that this would take too long to do on an exam. So you may have a tough one on your question, but this is how I was able to come up with it and figure out. And so where it says overstated and understated was kind of what they had given me. And then I just put in some hypothetical numbers. And then when you take the 92,000, these two inventory issues, and then you add the insurance issue and the truck issue, you get the 75,000. So I'll put that out there if you want to look at it. It's a challenge. Don't spend too much time on this. Just know that they're tough. And I try not to compound the years, and I won't do that on your exam. But yeah, the last one. Okay, so example 5, accrued salaries payable of 102,000 were not recorded at December 31st, 2003. Office supplies on hand of 58,000 at December 31st, 2024 were erroneously treated as an expense instead of supplies inventory. Neither of these errors were discovered nor corrected. The effect these two errors would cause, and so we have to figure it out. So accrued salaries payable, right? 102,000 would reduce net income and increase expense. So we have to think about that. And then the office supplies on hand 58,000, but expensed would reduce net income and increase expense. So we have to add the two to find the effect on net income. And so that's 160,000. And so since we only have one answer that has that, it's going to be B. But the way it would work now is that the 2024, it asks what's going to happen to the retained earnings, right? So 2024 December retained earnings would be understated by 58,000 because the other one went through in the previous year and then should correct in the current year. And so we have 58,000 understated for retained earnings. Any questions? Last one, thank goodness. Bishop began operations on January 1, 2023. Financial statements for 23 and 24 contain the following errors. So ending inventory is overstated, understated in 24, depreciation expense overstated, insurance expense 90,000 understated, 90,000 overstated. So in addition, on December 31st, 2024, fully depreciated equipment was sold for 43,200, but not recorded until 2025. No corrections have been made for the errors. Ignore income tax consideration. The total effect of the errors on the balance and retained earnings at December 31st is 2024, I'm sorry. So we have to look at this one and say, okay, so this 219,000 is understated. The 126,000 is understated. The 90,000 cancels out. And you have to add the gain, which understates 43,200. And so what you end up here is 388,200. Okay. Any questions? Because these are understated and this one's overstated, sorry. No, it's understated, that's right. Understated. Oh, it's just not less, it's just added there. Yep. Thank you. Any questions? Then which one? Because it doesn't affect retained earnings. It would have to be adjusted to the prior, like the beginning balance of retained earnings. So I printed out, and apparently I didn't bring it in with me, the chapter 21 case. So let me go grab the team thing and I'll be right back. So I'm going to stop recording now, and they're going to have time to work on the chapter 21 group project. And it's also available in Canvas.